Traders, welcome back to another price session trading lesson. And today's lesson is going to be a good one because price session today indicated a lot of learning opportunities. So the first thing I need to do if I'm a price session trader and I'm only reading the pure price session is I need to understand what is the main bias. Unless I know that, I don't really want to be placing trades because I would be more gambling. So I can see that the structure is indicating series of high highs and high lows. Each new high is higher, each new low is lower. So this is uptrend. But this is not particularly strong uptrend just yet. This is quite a weak uptrend. Why it is a weak uptrend? Well, because the bearish corrections inside of this channel are quite strong and the uptrend has a little bit of a range-like characteristics. And there's not that many bars. So this is uptrend with broad corrections. It's quite weak, but it is an uptrend nonetheless. So that means I need to identify the channel, the main pattern. And generally, we're going to find the main pattern, the channels, by connecting the first major swing. So this is the first swing. I'm going to connect it with the major second swing. Just going to copy it, put it at the top. And this is a weak bullish pattern that I'm watching. So right now, my main focus is to look for long setups, high probability longs, which means I'm looking for two-legged pullback second entry long because that is how market moves. And that is how the correction will deplete. So as the prices are correcting right now, you can see I have the blue line 21 bar exponential moving average on the chart, supportive indicator only, but it is one of the key entry points where high probability setups will form. And we have first entry long because this was the new high, exceeded this last high, and I always reset the count after the last highest high is exceeded. So we have new high, series of bars working lower, first entry long. I'm not interested because it's just first entry long inside of this downtrend, and we have second entry long. We close outside. And all the sellers got trapped selling directly into EMA. So there's a new high, first entry long, pullback, second entry long. Sellers got trapped. Uptrend is the pattern, so we're looking for longs. And this right here is a great high probability setup. According to price session rules, this was even the first setup I took today. You can see tier 1 signal bar closing on its high, indicating strong bullish momentum. Repeat pattern of this. You can see correction, lower high, trapping sellers. Or in this instance, it was lower high. Trapping the sellers and high low above EMA, confirming the bullish momentum. Same thing here. All the sellers got trapped here. Great second entry long, and the EMA kept holding, indication of the bullish momentum. This was a quick, easy scalp, and this is how we decide where it's okay to go long because the correction phase is going to end around the EMA if there's a attempt for new low and a high probability setup. So right now, the structure is not really changing. I can see that the bars are working lower, but I'm pretty much still thinking bullish. I need to redraw the correction again because there are small channels inside of the main channel that follow the trend line rule as well. There is a close outside and move to new extreme. So we have new extreme, which is indicating to me new low that the bearish correction played out. Can I go long? Not really, because the structure is weak uptrend and it's just starting. If this was a strong uptrend, quite confirmed, it's okay to go long here. And even when I was watching this live today, I had doji bar. Even though it worked for a scalp, since the uptrend is quite weak and not fully proven just yet, I believe it is better right now to wait for push above EMA and a failed second entry short, because this is what I'm expecting. I don't expect stronger correction because we have a break new low and the main pattern is up. So I'm drawing my corrections tight, and I just want to see confirmation of the bullish momentum to truly know that the correction phase is ending. So what I want to see is push above EMA and get a failed second entry short. Okay, we're breaking the trend line, which makes you wonder if the trend line is correct because the bearish momentum is quite strong. So you may be a little bit confused here, but look what happens. Shortly after, you have a strong push above EMA, which is indicating, okay, my initial analysis was correct. This is a bullish channel. I'm looking for a new extreme according to trend line rules because we just broke it. And buyers are want to see the new extreme before, the sellers will reverse the market. So just because you see a break of a channel doesn't mean you're going to be looking for reversals. That's not... You don't trade the breakouts. That's not high probability. Now we have high low, but I don't really want to take high low just yet. There's a small break, almost new extreme of this first leg. It doesn't really confirm second entry long. It's a little bit stacked. Don't really feel like high low is strong. I really want to see push above EMA and a trap for second entry short because uptrend is quite weak. Okay, and notice you have a big bearish bar and a big bullish bar reversal. So this is a new low. And this is how we look for high probability setups to go long. Not only second entry longs to get pullbacks, but we're also looking for failed two-legged pullbacks to the downside because sellers are going to get trapped taking second entry short on the wrong side of the market because the trend is up. So we have new low. I reset the count after each new low is broken. First attempt to sell, pullback, second attempt to sell. Look at this big bearish bar. A lot of sellers got trapped directly into trend line. Big bull reversal. But notice what happened here. This is the great setup context-wise. Everything makes sense context-wise. You even feel it's going to push higher. But you have 1, 2, 3, 4, 5, 6, 7 bars stacked. Even on these bars, this is a congestion. So definitely a bit more aggressive. If it wasn't congestion, you can definitely easily go long here because it's the perfect context. Downtrend played out with the break new low. You even have kind of like a larger two-legged pullback, indicating to you that the correction played out, push above EMA, and you need new extreme. You know, I almost took it, but I respected the congestion here. But you can see if the bullish bar is so big, you know, that's a real indication that's most likely going to push higher. Okay, this is what is important. Pay attention here because we have new extreme, which you now expect going to rules to get reversed or possibly correction. But notice what is happening. Prices keep pushing higher and keep pushing higher. And just like in our last video last Friday, we're going to use the same logic. Once I see a break at new extreme, this price session is really not behaving as if there's a break in new extreme. It keeps pushing higher and keeps pushing higher. This is not how price session is supposed to react after new extreme. There is not even pullback to EMA, no correction, no nothing. So just like last Friday when we widen the channel, we can try and widen the channel here again because there's a possibility that the channel may be a little bit wider, and with time you will be able to develop kind of like a gut feeling for this. You'll be able to read between the lines that the bullish momentum is just too strong and the channel is possibly wider, because you can see it still fits really well even if I extend, if I just make it slightly wider, and it explains why the prices need to correct a little bit more than just here. It needs to test the trend line. So right now I'm just going to extend it and I'm going to consider this uptrend in play. It's just a little bit stronger now. I have a new high, first entry long pullback, second entry long, but second entry long above bearish bar I cannot take, and far away from EMA, which there's a risk it can pull back. And now we have double trap. Everybody who went long on a bad second entry long far away from EMA got trapped, and everybody selling directly into EMA, felt second entry long in bullish uptrend, is going to get trapped. And also notice downtrend played out with the break new low, but more importantly, you have first leg down, second leg down. So this is the market moving into like a pullback at the EMA, quite a strong bullish bar, decent high probability setup. However, you don't have much room to swing high. So if you want to enter this, you want to make sure you can use limit order a little bit back so you have room to get out to scalp. Okay, you would have gotten the chance and market kept pushing higher. Okay, and now it gets a little bit confusing because now you can see we have possible overshoot. And you can see how overextended the push phase was. You always want to buy at the bottom or on the way up where the correction phase is ending. But now you're already breaking the channel, and overshoot can generate strong momentum in the opposite direction. For this reason, I'm not interested in going long here. New high, first entry long, second entry long. Yes, there is a second entry long, but the context is completely different. Notice what's happening. There is a correction phase ending here, and the push phase up, push phase up. Every trend has to reverse eventually. So here you no longer can look for second entry long because it's too late. You need to wait for market to correct again and then take the two-legged pullback. Double trap worked, but I'm not interested. Okay, I'm going to redraw the correction. At this point, what am I expecting? I'm expecting more like stronger correction, but the main bias is still bullish. If we push above EMA, I still want to consider possible failed second entry short. Okay, because the main trend is still up. I cannot take focus away from taking into consideration the main bias. Only thing I want to see is just letting the bearish correction play out and look for good longs. And now we have filled second entry short, but we also have smaller trading range you're forming. Right here, you're in the middle of the trading range. You have new low, first entry short, second entry short. You know, very tempting. Aggressive wise, not a bad setup at all. It's just you're coming off the resistance here. You had possible overshoot when you're watching this live, so you don't know how strong the correction is. So because of the possible overshoot, because of the resistance, a little bit more aggressive. But look what is happening. Another small overshoot, and more importantly, after overshoot, you should be having stronger bearish momentum. Generally, after overshoot, you don't get such a big bullish spike that is going to exceed the high where the overshoot happened, and even here. So once I see instant bullish push up like this leads me to believe that the channel is probably wider. But you don't know that in advance. You only get to adjust the channel after you see additional price action. I'm going to extend the channel here. Okay, only thing I'm expecting right now is to push above EMA and offer me a failed second entry short, because that is the safe trap to know that the buyers are resuming the main bias. And notice what we have. First leg down, second leg down. So the two-legged pullback, new low of the downtrend, micro double bottom. We have first entry short pullback, second entry short failure. Now when I was watching this, it looked like the failed second entry short will form bad below EMA because it reversed at the last second. So once I decided that the failed second entry short may not form, I didn't like forcing the setup, but I should have, because now it formed quickly at the low of EMA with the great bar. At the last second, it really reversed quickly higher. So this is a nice new low. First entry short pullback, second entry short. Smaller double bottom. Two-legged pullback indicating correction phase is ending. And the failed second entry short is exactly where the push phase will begin, just like here and just like here, while we are trading this bullish uptrend. Great signal bar and market continue pushing higher. Trend line is getting confirmed. And now we have new high. First entry long, pullback, second entry long, and another small first entry long, second entry long. You're at the EMA, you're at the key entry point, great bullish bar, and this is a second entry long, high probability setup. And once again, I'm not interested in chasing the market here because I don't know when the market is going to correct and stop me out. Once you see the two-legged pullback at the key entry point, this is indicating that the chances are really, really high, or higher than if you buy normal, then the market will resume. Nothing is 100%. But if you have the context down right, you're at the key entry point, the setup looks halfway decent, the chances are really high this is a high probability setup, and market will keep pushing higher. Okay, and now you can see we most likely have overshoot, because we got the trend line come from here, and we're breaking higher. When I was watching this live, I extended the channel a little bit, but eventually you have even a little bit more overshoot, which you're gonna see. It's better to play this as an overshoot, because the push phase really feels overextended, and it's getting confirmed here, the trend channel line. So we're pushing above EMA here. No real setup, we're far away from EMA. Even if you widen it a little bit like this, you still have a small little overshoot, and the push phase is definitely overextended here. Okay, we're correcting. I'm going to redraw the downtrend. Okay, we will break new low. This is what I see. And I'm just being patient here, not really interested, because I want to see prices come to me. So now we have new low, first entry short failure. And once again, once you have a break new low, I'm expecting failed second entry short to know that it is safe for me to go long. We have high low, but the high low didn't even get a trigger above this bull bar. Instead, there's inside bearish bar without trigger, so I can't take it now. And there was no trigger here below bear bar, nor here for second entry short. And by the time, you can see the push already formed, and we missed it. We didn't really get the second entry short failure. Unfortunately, we really were close, one tick away from getting here or here, but we never really got it. And now failed second entry short forms here. But now it's too late, because we had a possible overshoot. You're coming off the resistance again, and you want to see a failed second entry short once the move is about to happen, right around EMA. After you see this big push up, the move already formed. So by this time, this bullish correction happened. Now you have triple top resistance after overshoot, which can generate strong momentum in the opposite direction. So this failed second entry short is too late, and market can correct. You want to take it here once the move is starting, and not by the time you already push and the bullish move forms. Okay, we're correcting. Okay, we close outside, and we're breaking the main channel, which means I expect for prices to create new extreme, because look, this channel was quite strong, quite a decent uptrend. We have first leg down, pullback, second leg down, and I have new low, first entry short, pullback, second entry short. But notice the second entry short never triggered below this bearish bar, and the failed second entry short is inside bar as well, a little bit congested, so not good enough. But when I was watching this live, I was looking for possible higher low, and you can see high low form right here. So this right here is a high low confirmation of the failed second entry short. You can see two-legged pullback, downtrend played out with the break new extreme, first break of the channel, uptrend is new high. But notice the setup is congested, 1, 2, 3, 4, 5, 6 bar stacked. Now I took this setup and I took it as aggressive entry. It was risky setup, but I knew I was taking a risk here, but it was calculated risk. Why? Well, because this is exactly where the correction phase ends and the push phase begins. 2 legs down, break of an uptrend, push above EMA. This is exactly where a lot of times, 80 or 90% of the time, you will catch the beginning of the push phase. So if I catch a runner here, I get rewarded big time. So it is okay for me to take more calculated risk. Even if it is congested, normally I would wait this congestion out. But this is a nice bullish bar. And you can see I got stopped out, market reversed on me. But it was decent enough calculated risk, in my opinion, just to hope we're going to get the push phase. But you can see what can happen if you take setups in congestion. Also, you have possible overshoot, so you can have stronger correction than expected. And notice what happens. Market keeps suddenly reversing all the way down. Okay, so now you have to completely adapt. Market has shifted. This was the last attempt by the bulls to stay above EMA and to prove that they're strong and they're going to reach new high. The fact that here you didn't even have bars above EMA and you make the sell-off so strong to the downside, you already created so strong push down. Momentum is completely shifting and you need to trade the market you get, not the market you want. So 8 or 9 times out of 10, we're going to create new extreme. But this is that exception that if you combine it with the overshoot, you're going to take a step back and see, okay, we may have overshoot here. We push too far down. So there's a big chance that right now there's a brand new downtrend working and I need to adapt. This was too big of a push down. And this was the last attempt where bulls had their chance to push above EMA to look for a new extreme. It didn't happen. I can also expect why the channel, which I'm going to explain soon why. So right now we have this downtrend. We have decent bearish structure. We have new low, first entry short, second entry short. Can we get a second entry short? We don't. We actually get inside bar that stole a little bit. This is a second entry short. You know, decent setup because you have small 2-legged pullback right at the EMA. But you didn't really get a trigger below this bearish bar. Not a bad setup here. A little bit more aggressive. It worked for a scalp. Okay, prices are working higher. And they're pushing back below EMA. So you can see there was even kind of like a small second leg here and a second leg here. And now we can see flat EMA, price swings up and down. So there's most likely a consolidation. However, there is no great setup to sell new low, first entry short, second entry short, but everything is doji-ish bullish above EMA. Okay, trendline is finally getting confirmed, but everything is looking so sketchy. Can we get a lower high? We can't even get lower high. And now, why am I expecting a wider downtrend like this? Well, because the market momentum has shifted and I have repeat pattern from structure over a year ago, January 22nd last year. You can see this was where the bulls had their last attempt to create new high. They failed, and you can see exact same structure from today's price action as well. You have push down, you have consolidation, and you can see strong bearish downtrend followed. A market never created new extreme. Instead, the brand new strong downtrend happened. You can see exact same scenario. Push down, consolidation. This time you had the failed breakout early, but in the last screenshot we got it a little bit later. But it doesn't change the fact that the market is right now shifting in a strong downtrend. However, there is no great way for us to take a short here. Everything is stacked. You know, everything is doji-ish here, kind of messy. No really clean lower high. So far from EMA here as well. So we just have to wait for market to keep pushing lower. And now, this is a clearly strong downtrend. And just like we were looking for high probability setups to go long, we just reverse it and look for high probability setups to go short. So 2-legged pullbacks to sell, failed second entry longs. I'm just looking for prices to pull back to key entry point. It's like simple price action. I got the context done right. I got the main pattern. I'm going to redraw the channel and notice what we have. First leg up, pullback, second leg up. And this right here is a 2-legged pullback, break new extreme, larger 2 legs. It's not perfectly close enough to EMA, but since the downtrend is so strong now, you can take a setup like this. I actually took this setup myself as well. Great bearish bar, clean 2-legged pullback, uptrend played out with the break, new extreme close enough to EMA. You get a lower high, but it is really far. Triple bottom here. It managed working. This is why right now you're getting confirmed that this is a strong downtrend, because even this lower high is working. So right now we're trading a strong downtrend. We get a second entry short, but I can't take it. It is above EMA, doji, into the uptrend. And this is why we're waiting for two-legged pullback to form below EMA. You know, sometimes you can take second entry short above EMA, but there needs to be more price action factors aligned. You need to have a break new high, possibly triple test some resistance, or you're close to key entry point. Here you're in the middle of no man's land, no key entry point. Horrible second entry short, looks like one leg. So what you're expecting, a lower high confirmation. If something is wrong with the second entry short and you have big push down, you expect lower high. And now we get lower high, but you push quite far down. Once again, not full at the EMA, doesn't feel that clean. If it formed here, would have been perfect. You can see it ended up working regardless. So simple price action. All I'm looking for is just once again resetting the count. First entry short, pullback, second entry short. Second entry short, EMA held once here, twice again, ticked higher, trapped all the bulls, EMA kept holding, second entry short, work for a scalp. Horrible setup above EMA, just horrible bar, but you can see larger two-legged pullback again. Market likes moving pairs of twos, but it's hard for you to know it's going to work above EMA here. And by the time it's too late now. Pretty straightforward price action. You can see two-legged pullbacks indicating end of a correction. There are a lot of easy high probability setups on the way up. And then the market shifted. We didn't get new high. Overshoot came into play. After you push all the way down here, you have to switch. You push way too far down. Rejections of the EMA, a brand new downtrend has started and the directional bias changed. So we switch to bearish rules and we just look for two-legged pullbacks at the EMA, felt second entry longs, or if something is wrong with the initial setup, lower highs, and you can see what a great downtrend it ended up being. So I hope you had a great trading day. I'm going to see you guys in the next one, and good luck with your trading.